Hello, my name is John Enzing. I'm a certified licensed real estate instructor, both in Louisiana and Florida. What I'm doing in this video is I'm bringing you a test question analysis of the toughest questions that you may see on the state exam. There's a couple of varieties that come from different subject matters, but I think these are really important that you understand how to read the problem, because the question's not hard. You know the content. The problem comes in is the play on words they use. A lot of people call it a trick question. Oh, that's what it said, in other words. So I'm going to bring you and make you aware and expose this to you, so when you get to the state exam, you're going to be ready for this type of stuff, okay? Couple things: read the question carefully, and again, watch the play on words. Listen, if you need some private tutoring, you can go to privateturingsession.com, and book some time with me. I'll be more than happy to spend one-on-one with you to prep you for your exam. Or you can email me, john.enzing@gmail.com. Okay, so let's get started. All right, the first thing we're going to talk about is a real estate calculation problem dealing with interest rates. Okay, interest rate. Very popular type question you'll see on the state exam when it comes to calculations. Okay. Now, one of the things I like to use is small memory aids. So if I try to memorize a formula, that's a little bit more difficult than if I had a memory aid that brings it to memory. Okay. So the memory aid I like to use for interest rate is called IRV, I-R-V, IRV the banker. Okay. We're going to call his name is going to be IRV the banker. And that basically stands for interest equals rate times value. Okay. IRV the banker. And we're going to use that in all our interest rate type problems. Okay. All right. So let's look at the question that you may see on the state exam and see how this can be a tough question. Even though it's a short question and a small one, it still can be tough. So if an interest payment of $1,000 is made every 3 months on a $40,000 loan, what is the interest rate on the loan? Remember, IRV the appraiser. Well, they give you two variables. They give you the interest payment on the loan, and they give you the loan value, which is the two numbers you need to calculate the rate out of IRV the appraiser. But here's the play on words. It's made, the interest rate of $1,000 is made every 3 months. Okay, so we got to kind of organize this and figure out, am I just going to use the number or the number $1,000 and the 40,000 to calculate the problem? Or is there another calculation I have to do before I go into IRV the appraiser? Okay, so let's look at this. So you want to actually know some rules of thumb, I call it, or rules to know. Okay, so the first thing you want to understand is what the theory is, like we said, behind interest rate. This is the amount of money that's paid above the principal loan amount, which is $40,000, that is paid back to the lender. That's how they make their money. That's the profit on $40,000 they make. Okay, as an interest rate, that's the money they're going to get above what they lend you, and that's how they make money, amongst a lot of other things like closing costs or financial costs too as well. Now, you got to know this. Anytime you're doing calculations on interest rate, it's on an annual basis. When they calculate interest, it's done annually. Okay, it's done annually. Remember, we talked about IRV the banker, real nice guy. Interest equals rate times value. Now, here's the play on words. If you go back to the problem, it says the interest is $1,000. They give you the interest, $1,000, but it's telling you every 3 months. That's how much interest is being paid. So instead of jumping into the calculation of IRV the banker, using $1,000 for the interest and $40,000 for the loan, you've got to calculate an annual interest rate. Remember, this is done every 3 months, which equals 1 quarter. Okay. How many quarters are in a year? There's 4 quarters in a year. Okay. So actually what's happening is you got to take 1,000 every 3 months. There's four 3 months in a year, and you got to multiply it by 4. So the annual interest, watch this, is $4,000. Okay. Now we can apply Irv, the banker. So the interest is equal to $4,000 equals the rate times the value. Okay, so I got 4,000 equals the rate. That's what we're looking for, times 40,000 or the value. So all I got to do is simply divide. Algebraically, I'm going to divide 4,000 by 40,000. I get 10%. 0.10, and you convert it to a percent, I get 10%. So we're talking about answer B, okay, 10%. Now, let me just kind of circle back and just emphasize reading the question, the play on words, okay? It's underlined. $1,000 interest made every 3 months. We typically, as humans, our nature is to gravitate to a math problem and only pull numbers out, okay? So if we read this too quickly and we see $1,000 and 40,000 and we know the formula, then we end up taking 1,000 divided by 40,000, okay? And we search for that answer. So the whole point of it is you've got to slow down and look at the content in the question, and there's some additional calculations they're going to ask you to make. For example, why didn't they just say the annual interest rate is 4,000? Why didn't they give you that? Because it's too easy. They want you to think, but we read so fast, we don't see every 3 months as part of a calculation to get a total interest, which is what we need to calculate the rate, okay? So pay attention to small things like this. All right, here's our next one. Another real estate calculation that they like to throw on the exam is equity. Equity. So you may have a problem like this. A condominium owner purchased a condo for $275,000 and listed the unit to sell for $370,000. The condo unit appraised for $350,000. There's a first mortgage of $175,000 and a HELOC, which is a home equity line of credit. That's what that means, of $80,000 used personally for a school loan. The owner also has a vehicle loan for $35,000 and a Christmas loan for $1,000. What is the investor's equity in the property? So the basic formula for equity is you're going to take the market value minus the debt on the property. That's the basic formula. So we got market value, and this is how it's defined: market value minus the debt on the property. Okay, market value minus the debt on the property. Now, notice I underlined property. Okay, I underlined property. And the reason I do that is because you see we've got other loans out, one for a vehicle and one for a Christmas loan. Okay, but notice the formula says on the property. These are liens that have been filed on the property. Now, I got to just simply list all the debt on the condo. What's on the condo? The debt that are the liens that are on the condo. Okay. So the first one is I got a mortgage. I still got a balance. I got a payoff of $175,000. That's my first debt. My next one is I got a home equity line of credit. And you say, well, John, that was used personally. Isn't that like a car loan or a Christmas loan? Yes, it could be, but they borrowed against the property. Okay. So it doesn't matter what you use the money for. Okay. You can use it for anything. It's the actual loan that's against the property. It's the lien against the property of $80,000, the home equity line of credit, that's going to be used personally for school loans. So that is part of the debt. That's the play on words you got to look out for. Okay. Personally, see, they put those words in there personally to try to trick you and say, oh, okay, well, then that's not part of the debt on the property because you're personally using it. No. You got to look at the word HELOC. Okay. You got to look at the word HELOC and say that is debt on the property. I'm personally using it for a school loan, but it's still debt on the property. So I've got $80,000. So far I've got a first mortgage and a HELOC. Now I got a vehicle loan, two other loans, a vehicle and a Christmas loan. Remember, the problem says, and it states that they're loans. Doesn't say anything about debt on the property. So this is a vehicle loan that maybe have gotten from a bank, and a Christmas loan or a signature loan, absolutely they got from a bank. That is not debt on the property. That's a personal loan that they're paying back. Okay. Remember, anything, a judgment lien, anything that has a lien, a judgment lien, it could be a property tax lien, first mortgage lien, a HELOC lien, construction lien or a mechanics lien, anything that's debt on the property is going to count against the equity. Okay. But here, $35,000 and $1,000 for Christmas loan is not debt on the property. Those are personal loans. That's debt of personal. Okay. And they're not subject to the property. All right. So first thing I'm going to do, I'm going to list all my debt, 175 plus 80,000. And then I'm just going to add it together. So my total debt is 255,000 on the property. Now, you got a lot of other numbers in there. You got one that was when he purchased it for 275,000. He listed it to sell it for 370,000, but it appraised for 350,000. So you got a lot of numbers you can choose from. And again, they do this purposely to try to confuse you, but you know, equity by definition is the current market value. Well, what the owner bought it for is not current market value. What the owner listed the unit to sell for is not market value. But what did it appraise for? That is considered current market value, the appraisal. Okay. So if I take the, again, the equity on the property, which would be 350,000, minus the debt on the property, 255,000, you can see that my equity is 95,000. Okay, so we're talking about answer A. Answer A. Okay. Now always remember, if I just take 350,000, at least I figured that out, that the market value was that. And all I subtracted was my first mortgage because I got pulled in, I got hooked on a personal school loan, and I didn't recognize HELOC as a lien on the property, so I don't include it as debt. You can see that if I subtract that difference, I get 175,000. And that answer is going to be available for you to select. So you have to slow down. Okay. Just because numbers are there doesn't mean they're used. And if they're not there, it doesn't mean they can be used. So you got to slow down and you got to apply the theory behind equity. Now circle back here. Debt on the property only is subtracted from current market value. Okay. So don't get hooked on the play on words. And then all of a sudden, you're just going to use 350 minus the first mortgage and you get 175,000. They'll put that answer in there. Okay. All right. Let's talk about lead-based products. This is a real famous question they like to ask. And it comes in the format of which of the following is true or which of the following is not true or which of the following is false. Any type of question like that. So you're going to have to really go through and decipher this, and you really got to slow down on this because they can really get you in a tongue tie here and really hook you big time and make you select the wrong answer. So let's look at the play on words here. First of all, you see which of the following are not true. We don't typically see questions like that, so we have to step back and say, okay, which of the following is not true means which of the following is false. Right? So I'm looking for one false answer and I've got 3 true answers. So the next thing I want to do is I'm going to take my technique. I take each answer and I convert it into a question. That's a true false question. I'm going to convert each answer. Okay. Until I find the one that's false. Okay. So if I go answer A, 1978 is when the federal law banned lead-based products. Therefore, in other words, answer A says the federal law prohibited the use of lead-based paint products in 1978. And that answer is true. because that's when it was banned. Anything before 1978, you have to disclose, okay? Anything before. So after 1978, or excuse me, 78 and above, you can't use lead-based products, okay? So in 1978 is when the federal law banned lead-based products, okay? So answer A, if I read it, federal law prohibited the use of lead-based in 1978, and the answer is true, okay? The law requires all lead-based products to be removed, okay? So you may sit there and go, well, that can't be true because the law says it does not have to be abated, which means removed, abatement. Now, if you do have lead-based, paint in the house, it's good to get it scraped off and get repainted, but it's not required by law. It only has to be disclosed, okay? So the word requires all lead-based products to be removed is a false answer, okay? So that's a false statement. So I'm going to continue reading, even though I found my answer. So I'll go on to C. Real estate agents are required to distribute a lead-based pamphlet if the property is built before 1978. And we know that to be true. We discussed that in the very beginning. It was banned in 1978. So anything before that, you've got to disclose it and you got to distribute to your buyers a lead-based pamphlet form, okay, or a brochure. You can get those off the website, the EPA website. Now, let me stop here for a second, because a lot of times you may get a question, instead of saying built before 1978, it says built after. Be careful. One word can make the difference of a right or wrong answer. So make sure that when you read either before 78 or after 78, it lines up with what they're asking for as an answer. And then the last one, all the above are not true. That would be false, okay? Because only one of them, A, C, and D are true. B is the only false answer. So you got to kind of slow down. Even though it's a short question, you got to slow down. First thing I do technique-wise, I define what not true means. So I say to myself, I'm looking for one false answer, and I've got 3 true answers. My next step I'll do is I'll take each answer and convert it to a question, okay? I'm not looking for the false answer. I'm going through each one. Right? I'm going through each one. And I go through all of them. If B's the correct answer, I'm still going to go to C and D just to confirm. Okay? Just to confirm. So that's how I do. That's a technique. It works really well. It doesn't confuse you on the actual question itself. So you have to be careful with this type language. Okay? Answer B. Law requires all lead-based products to be removed. That's a false answer. That's not true. All right, let's talk about LTV, or what you're familiar with as loan-to-value ratio. This is another financial real estate calculation. So you may get a question that says the buyers paid a cash down payment of $60,000 and applied for a $180,000 loan. What is the LTV? Again, expressed as a percentage, loan-to-value ratio. Is that what it is? It's the loan amount, watch this, to the value of the property, okay, expressed as a percent. If I've got a loan value of $80,000, for example, and the property is $100,000, the cost of it, 80 divided by 100, I got an 80% LTV. Okay, so I'm borrowing 80% of 100,000. That's my loan amount. The loan amount to the value of the property. Okay, now you got to know some rules of thumb here. We're going to go over. This is very important that you take this and you know this, and it does make sense, and I'll explain it. Again, we're talking about the loan amount to the value of the property. Now, the rule of thumb that you want to know, in theory, about LTV is you have to use the numbers of the appraised value or the sales price, whichever's less. Now, we don't have an appraised value in here, and there's not given a sales price. I said, John, how are we going to figure this out? That's what I'm going to show you, and that's what the play on words is here for, because you can really get confused about this. Because by definition, the loan amount is the loan to the value of the property, loan divided by the sales price, or appraised value, whichever is less. So why is that, appraised value or sales price, whichever is less? Because the bank is not going to lend you any more money than what the property is worth, or the value of the property. So that can come under the contract price or the sales price. let's say, for example, you put an offer in for a home on 300,000 on a home for 300,000. And so that's what your loan is going to be for, 300,000. Well, the appraiser comes out and says, hey, John, the property's appraised for 290,000, 10,000 less than what's under contract. The bank's not going to lend you 300,000 and be flipped into property 10. They're going to lend you what it's worth. So they're going to choose the lesser of the two, appraised or sales price, whichever is less. Okay. So you have to know that, because if you get an LTV problem, it's got appraised value, it's got a sales price in it, it may have a list price in it. You want to take the lesser of the two to make the calculation. Here, we don't have an appraised value. You don't have to worry about it. But we need a sales price. So this brings us to our next step. Okay. Again, the loan amount to the value of the property, okay, the lesser of the two, appraisal or sales price, will be divided into the loan amount. They say, well, John, we have a loan amount for 180,000, but what's the value of the property? So to calculate the value of the property, you're going to take the loan amount and you're going to take the down payment of the loan amount and you're going to add them together. Okay. It's 240,000. That is the price of the home. If you're borrowing 180,000 and you've put 60,000 down, you add them together, that's the price of the home. So now that I got the price of the home, which is 240,000, I can make my calculation. Loan amount to the value of the home, 180,000 divided by 240,000, 75% LTV. Okay, 75% LTV. So don't go off just pulling numbers out. Again, you got to slow down on these type math problems. I mean, why didn't the test writers put in the home was priced at 240,000 and applied for a $180,000 loan? Then all you'd have to do is divide 180 by 240. That's too easy. I'm telling you, these test writers, it's not 1 + 1 is 2. You know, there's some objective questions you're going to get, but you got to think about these things. And there's additional calculations in these problems that you need to do to get this correct answer. Okay. It's very important that you understand this concept when it comes to these calculations. All right. This is one type of LTV problem you'll get. Another type of LTV, they'll give you the price of the home. They may give you a down payment in percent, and you got to calculate the loan amount, which is the opposite of this. Okay. So always understand, if you know your rule of thumbs, LTV means loan to the value of the property, loan divided by the sales price or appraised value, whichever is less. Here, you've got to calculate the home price because they give you the loan and what they put down. That together will give you the home price. Then you can divide your loan amount, 180 by the home price of 240, you'll get 75%. Watch the play on words. The problem doesn't give an appraisal value or the sales price, just like we mentioned, okay? Gives you a down payment of 60. It gives you a loan amount of 80,000. So you got to stop and think. By theory, I know LTV is the loan to value of the property. It's the loan amount divided by the sales price or appraisal value, whichever is less. I don't have a sales price. I don't have an appraised value. So how am I going to calculate this? Okay. So you have to really be attentive when it comes to this. Okay. Interesting enough, if I do 60,000 divided by 180, see, we tend to gravitate to numbers and we don't see another calculation in this. That's why you have to understand the theory behind LTV, that it's the loan amount or appraised value, whichever is less, divided by the price, or the loan amount divided by the sales price or appraised value, whichever is less. And so not having an appraised value and not even having a home price, the typical thing that we'll do and gravitate to is we'll take 60,000 because it's a number and divide it by 180 and we get 33.3%. And guess what? They'll have that answer there. Wrong answer. Slow down. You almost got to sit back and talk yourself through it before you start. Don't even worry about looking at answers. Don't even worry about calculating the problem yet. Understand what the theory is. Understand the vision of what LTV is about. The formula, loan to the value of the property. What you need to calculate this answer and then seek that answer first, which is the home price. You got to add both of them together. Then you go about your LTV formula. Okay. All right. Here we go. Legal description calculation with the word AND or and in the problem. Okay. This is a question that really can confuse a lot of people. So if I got a question similar to this, and this comes from the government survey system, right? Government survey method. If a parcel described as the south 1/2 of the southwest 1/4, and there's the word and there, the south 1/4 of the southwest 1/4 of a section, how many acres are in this legal description? Okay. So you've got one and another of a section. Okay. So you got to think when the word and is used, you've got two separate acreages you got to add together to get the amount of acreage for that section or of a section. Okay. So let's go through this. Remember, this comes under the government survey legal calculation. You got to know 640 acres is in one section. Okay. You got 36 sections in a township. One section is equal to 640 acres. That's a unit of measurement you have to know. Okay. One section is equal to 640 acres. Now, it's a very easy calculation because all you have to do is take the legal description, the denominators out of the fractions, and multiply them together. Okay. So 2 times 4 times 4 times 4. If I multiply those together, if there wasn't the word and there and I multiply them together, I get a number. I just divide it into 640 and that's my acreage. Okay. So we got 1/2 and we got 1/4. You see, I'm circling them in the problem. I got 1/4 and I got 1/4. So I'm going to take the denominators out of each of those and multiply them together. And that's going to be my constant I'm going to use to divide into 640 to get acreage. It's very easy. Here's the play on words, though. The word and. This is two separate calculations. If the word and is not in there, all I'm going to do is multiply all those denominators together and divide it into 640, and I got the acreage. But because the word and is there, I've got to calculate two separate calculations. Okay? Two separate. So I'm going to go to the left side of the word and that's the south 1/2 of the southwest 1/4. That's my first one. If I take 2 times 4 is equal to 8, remember I'm just multiplying the denominators together. I put that into 640 or divide it into 640, I get 80 acres. So on the left side of the word and, I've got 80 acres. Now, on the other side of the and, right, two separate calculations. I got 4 times 4 is 16. That comes from the south 1/4 and the southwest 1/4. So again, I'm multiplying the denominators together. 4 times 4 is 16. Divide that into 640, and I get 40 acres. Okay. So I've got two separate descriptions, basically, of one section, and you figure them out independently or separately, and then you add them together. So all I'm going to do is take 80 plus 40, and I get 120 acres. Okay. So I'm talking about answer C. Okay. Answer C. Now listen to me carefully. You got to pay attention, because if that word and is not there, it becomes 2 times 4 is 8, 8 times 16. Okay. And then you divide that into 640. All right. So you got to be careful with the word and. If the word and is not there, again, you're going to multiply them all together and divide it into 640. That's your acreage. If you see the word and in the legal description, calculate the left side is separate, the right side of the and is separate, and then add them together like we did here. Okay. So you have to watch the play on words. These are, yeah, they're tough questions, but what makes them tough is a play on words, right? It's an easy calculation, as you can see. But you can see if you don't see the word and, you're going to get the wrong answer. Okay? So the play on words, treat it as one calculation. This is what happens. You'll treat it as one calculation. 2 times 4 times 4 times 4 is 128 divided into 640 is 5 acres. If that word "and" is not there, that would the answer would be. But the word "and" is there. So you got to do it as two separate, which is a totally different answer, 120. Okay. And so answer 5 acres, answer A would be the wrong one. So what we typically do, watch this now, pay attention to me carefully. We read the question and we go, oh, okay, that's a government survey. Okay, 2 times 4 times 4 times 4, 128 into 640, 5 acres. Boom, there it is, answer A. And off you go. You finish the whole test in an hour, and you do this to several other questions, right? And you walk out and you go, why didn't I pass? It's not that you don't know the content, because you obviously do. You calculated the problem. The problem was you didn't read the question. You got to slow down and look for small play on words like this. This one word, "and," means the difference of selecting A versus C. This one question could be the difference of passing or having to go take it again. Okay? Slow down. You got 3.5 hours, depending on what state you're in, on to take the test, either with Pearson VUE, PSI, a few other contractors out there, but you got plenty of time. And if you show good continuity and you take your time and read the question, you'll find you'll probably be a minute and a half on each question. And that's going to bring you to a nice ending of about 20 minutes left. Okay. So watch the question, watch the play on words. Okay. Remember, at the bottom, I put in, remember the word "and," you work each side and add them together. If the word "and" is not there, then you multiply it, then you would get 5 acres. That's always something to remember. I put a big star by it, okay? The word "and," you got to watch that in the legal description of a real estate calculation. Hey, listen, I hope you enjoyed these few questions, right? We had 5 of them, went in depth and discussed the play on words. What do they all have in common? They try to trick you with verbiage, okay? So you got to slow down and you got to look at the question, read it, and find out what theory is going to apply. Do I have to work out more calculations to get a number I need to get the answer, etc.? Okay? Listen, you're going to do well on your test. Again, if you need some private tutoring, you can go to privateturingsession.com, privateturingsession.com. Okay? Look, we'll see you sometime in the future. Bye for now.